Are you looking at any of the retailers? We talked about Target already this week. I'm just looking at it with that 20% increase in their annual dividend. You're now talking about a dividend implying a yield of 2.78%. Walmart's at 1.83%. Do those yields start to interest you, or is this just an area where we don't know enough about the consumer yet that you want to see the print on the second half?
I think you want to see the print in the second half. I think those yields are good, but they're not really that attractive. Two of the companies I just mentioned, Bristol and Morgan Stanley, have 3% dividends and growing with earnings growing. So there are a lot of other areas that if you're a dividend investor, you can look at and say, hey, do I want to be part? I mean, a company like Amex has a dividend that's growing. So I think the retail sector is a little harder to invest in. It might be easier to trade around. But especially as the consumer is now spending money on services, they're spending money on travel, hotels. I think there are opportunities there, whether you want to invest in an Uber that's now, focused so much on cash flow and reopening. So I would stay away from some of these stocks, especially the ones that have focused on inventory that the consumer is really not going to anymore.
Energy has been the best performing sector of the year, and we're talking about some pretty spectacular gains as WTI is up about 60%. We just had Jeff Curry on from Goldman Sachs in the last hour. He talked about how he thinks we are only at the beginning of a 10-year super spike in not only oil prices, but commodities writ large because of underinvestment in all of these areas. But if you're looking at energy with the gains we've seen to this point, his point that it was really something interesting to think about. We're at about 5%. Energy makes up about 5% of the S&P 500 when you're looking at market cap at this point. But from an earnings perspective, they make up closer to 9%. Is that an argument that even though we've seen significant gains and we're nowhere near what you should anticipate?
No, and I think energy has been a great sector, and we've been, a little bit over market weight on that. But I'd be a little careful here because good news in the economy could be that money moves away from this sector to the others, and bad news means that, hey, prices are going to come down because demand comes down. These companies have done a great job in terms of leverage, in terms of buying back their shares. They have not done what they did in the last cycle, which is go to spend money and grow. So I still like it. I like the Chevrons of the world. I like the Exxons of the world. So I like the companies with strong balance sheets that have been very disciplined, but I would not chase it at these levels. It's had a great run, and even though a lot of new money hasn't come into the sector, it is one of those things that has done so well that I'd just be careful. On a dip, I definitely put my toe in, but you'd have to be careful here. There's some speculative plays in energy that have done very well as well. So an investor, a trader can get in there, but an investor needs to be careful because you are chasing at this point.
Shepard Smith here. Thanks for watching CNBC on YouTube.